traders. Gary Wagner here. Just about 8:30 in Honolulu, 2:30 in New York. It is Tuesday, 18th day of August, 2015, and this is the daily report for gold and silver. After trading nominally higher, up a couple of dollars overseas, we have gold currently trading off anywhere between 30 cents, as you can see here in the spot market, down to about off $1.50 on the day in terms of the highs and lows. 21.19 on the high side, 11.0980 is our low today, and that of course is spot. When we look at COMEX, which is still actively trading, off about $2 on the day, trading at a low of 11.0850 and a high of 11.2040. As I said, currently off $2.10. But the big mover today, and the move is against us, is silver. Silver is just fallen out of bed in unison with commodities as a whole being dragged down, specifically copper right now. And as you can see, silver is trading at 14.81. We had a stop roughly, I believe, at 96. So we did get stopped out this morning. As I said yesterday, what we have noticed in silver is that you absolutely have some extreme volatility, and that volatility is coupled with light volume, summer trading, light volume compared to gold, and the fact that as the equities markets have been under pressure, the industrial component of silver has weighed in. We are seeing the same thing in platinum and palladium, both markets along with silver under pressure today. So traders, we are looking at a daily chart of silver. This is the continuous contract of COMEX, and when we do that, it also has the MACD. When we do take a look at this, a couple of things are very, very apparent. First of all, we did have this market with an upward bias and these cascading channel lines that were moving up. We had a defined break below this particular price point or support level in silver. And as I said, we have an utter breakdown in the market. Look at the dynamics of this day. And over the last couple of days, one of the things that we talked about was the fact that in silver, you've got these almost whipsaw markets that have these dramatic moves, really due to a couple of things, and the fact of light liquidity or summer volume is absolutely one of them. So we are stopped out. As I said, our stop was at just below 14.95 on this particular trade, but the gold trade is still working strong for us. When we take a look at gold, of course, we're in at 11.04. We do have the market trading in essence now unchanged to down a little bit. This according to spot, 11.1736. Take a look at a daily chart, because the one thing that becomes apparent when we look at this chart is that after this market sold off a little bit, and that's after hitting these highs for 2 days in a row at 11.25, let's go ahead and kind of blow this up a little bit, but at 11.25, we hit this kind of a double top. Over the last 3 days, we have had the market clearly in a consolidation pattern. Now, you kind of have a push-pull scenario going on with gold. On one hand, you have the Chinese equities markets, which was just brutalized today, I believe down over 6% on the day. So you've got a little bit of safe haven buying coming into the market. At the same time, we had some data come out about a housing report, and it came out stronger than expected, which would be bearish for gold. So you've got this push-pull scenario kind of tugging at both sides of the fence in gold, and the net result of this push-pull with these different market forces is really continuation of consolidation, and you can see that right here. You had an unchanged day here. This would be Friday, of course, Monday, and then, of course, today's trading activity, which is not over, but as I said, was up overseas and is now, in essence, up $1 or so to down $1 or so in terms of daily trading at the Forex as well as the COMEX. The last chart I do want to look at on today's show is a standard candlestick chart, 720 minutes per bar. And one thing that we can clearly see when we look at this particular chart is if we take a look at this 23% retracement level, 1109, we kind of extend this line over, we can see that that matches up quite eloquently with the low today. We also, if you take a look at the type of candlestick, it is an umbrella candle, whether it would be a hangman or a hammer. would be something that would be hard to discern because you have this market neither moving up or down for these just preceding candles here. But nonetheless, what it does tell us is when this market hit these lows at about 1109, buying came into the market and moved it up to where we're at now, which is in essence unchanged to down a couple of dollars on the day. Maintain our current long position in gold. Also maintain our current stop, which is just below 1102. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update review. Bye-bye.